welcome all of our audience to this panel. My speakers are eminent and need little introduction, but they are Ms. Kristalina Georgieva, who is the Managing Director of the International Monetary Fund, and she also co-leads the Global Commission on Adaptation. In addition, we have the Honorable Aiyaz Sayed-Khaiyum, who is the Fijian Attorney General and also the Minister for the Economy and the Minister responsible for climate change, as well as the Commissioner to the Global Commission on Adaptation. My name is Miranda Johnson. I am the Deputy Executive Editor of The Economist. I've also served as its Environment Editor, and that means that I have particular pleasure today in discussing with Kristalina and Aiyaz a climate resilient financial system in a post-COVID world. Perhaps, Kristalina, we can turn to you for the first question. Obviously, the COVID-19 pandemic is everywhere and on everyone's minds. How has it led to a reappraisal of business as usual? And how can we use this moment and potentially the desire for change that it brings for good? How can we use it to further climate action?
Let me first say how grateful I am for the opportunity to be with Aiyaz in this discussion. He has so much to share from an experience in a country on the front line of the climate crisis. We are experiencing a tremendous shock, the worst pandemic in 100 years, the worst economic crisis since the Great Depression. It is a wake-up call. It tells us that we are in a more shock-prone world. And it is also an opportunity to recognize the critical need to build resilience to shocks in the future. And of course, for those who don't like the pandemic, there is no way you're going to like the climate crisis. When I look into the year we are having ahead of us, I see two consequential transformations that we ought to embrace. The first one is the transformation towards the digital economy and more automation. It is already happening. But hand in hand has to go the transformation to the new climate economy. And fortunately for us, we are in a world of low interest rates that provides ample opportunity for governments, especially in countries with more fiscal space, to act decisively and underpin this transformation. When it comes down to climate resilience, it is for everyone to act. Anybody who thinks that the climate crisis is something that may come, wake up, it is already here. It is particularly pressing for the countries that are like Fiji on the front line. And let me just say, from our perspective, from the perspective of the fund, absolutely essential to embrace the right policies. Of course, above all, it is to slow down, arrest, reverse emissions, because the more aggressively we act on reducing carbon emissions, the less would be the need of adaptation. But then two, be much more forceful in adapting to a changing climate. We simply do not spend enough. There are various estimates. One tells us that we are maybe 5 to 10 times below what is necessary for climate resilience. And let me finish what climate resilience would entail. It would require resilient people, people that are healthy, educated, able to adapt with social protection at the time of shock. It of course requires resilient infrastructure. This is the costliest part of climate resilience. And it requires all sectors of our economy, agriculture, above all for food security, to adapt. So for everybody, we have to all come together. For the IMF, absolutely essential for macroeconomic stability and financial stability to step up, do our part of this job.
And Kristalina, what you were saying there about not spending enough, there obviously has been masses spent in the past year, shall we say, as countries and companies try to survive the COVID-19 pandemic. I mean, there's going to be a lot of bad debt in the private sector. Do you think that will impinge upon what can be done now and also make both public and private sector reticent to continue shelling out?
The first months of the pandemic, understandably, all the efforts were to prevent the economy from collapsing. So there are no massive mass bankruptcies, there are no massive unemployment anywhere. And what we have seen in the data is that indeed, the first 6 months, very little attention to anything but keep the economy afloat. This is starting to change. We are seeing much more forward-leaning approach by governments. The European Union is the brightest example, 750 billion stimulus package, 30% has to go green, with a lot of emphasis also on resilience. We see other countries very massively stepping up what the public sector is doing. And thankfully, we see incentives for the private sector. They're multiple. There is incentive coming from the banking community, more and more a recognition that we have to disclose climate-related financial risks. And as we standardize this disclosure, this would serve as a big impetus both for the transition risks and for the climate disaster risks. We also see more attention to carbon price. And let me say it as loud as I can. We ought to price carbon and over time bring it to the level that is necessary for this transition. And as governments generate more revenues from carbon taxation or carbon trade, they can direct these revenues, they can earmark it to compensate those that are impacted by this transition, but also to finance climate resilience, to finance the transition itself. Whether or not we act firmly and fast enough is to be seen in this year. Maybe the stars are aligning because we have COP26, a big driver of attention, policy and political attention. We have G7, G20, led by countries that are making loud and clear commitment to this transition. Virtually within hours of days of this discussion, we had US rejoining the Paris Agreement. So hopefully all of this would be, we wake up and we act in 21 to take the turn as decisively as possible. And on the issue of debt, obviously we have to think about how we bring down debt levels, that is for sure very important. But let me say, I worry about private sector because we are delaying some of the bankruptcies. I worry even more about low-income countries in high distress. And we have to have the policy support on both sides for the private sector with strong insolvency frameworks, well-thought process of making sure that if companies are to exit, it is not disorderly exit. For low-income countries in distress, more grants, more concessional finance, more debt relief, possibly linking some of it to climate action.
Absolutely fascinating. I'd love to come back to that point, but before then, I hope to bring in Aiyaz, who can give us a little bit of sort of Fiji's perspective on what's been going on, because it's not as if COVID-19 is the only crisis that Fiji has faced in the past year. Aiyaz, I wondered if you could tell us a little bit about, you know, what sort of Fiji has learned and can share about sort of regrouping and rebuilding, particularly in a resilient way.
Thank you. It's actually interesting because last year when we had some active cases in the community, I think we had about 5 or 6 cases, and there was various lockdowns in various parts of the country. We actually had a fairly large cyclone to the east of the country. So we had to actually deliver relief supplies, the logistics, rebuilding, whilst also having to be mindful of, you know, the COVID-19 protocols. So I think it's you know, the reality of the matter is you'll have both of them together. The other point is that, you know, we had a Cyclone Winston, about 3-4 years ago that wiped off 1/3 of the value of our GDP within 36 hours. But we still had the tourism, most of the tourism properties actually were still up and running. So within 2-3 weeks, we had various parts of Fiji, you know, receiving tourists. At the moment, none of the hotels are damaged. They're all fine, up and running, but there's no tourists. It has an enormous impact on government revenue. We're a massive contraction of the economy, of the GDP, by over 20%. And of course, now the new you know, dynamics is access to vaccines. And we have a country like Fiji, which is you know, has been COVID contained for close to 300 days now, no active cases whatsoever. So your ability to, given these sets of dynamics, your ability to actually build back better is very much restrained or constrained, I should say. We've just had a cyclone, Category 5 cyclone, in the northern part of the country. So, you know, the way that you approach, for example, building back better, your ability to ensure that your infrastructure has a lot more resilience is far more limited. And we have to work within the constraints of the COVID-19 world in your country. So I think the reality of the matter is that working with your various international financial institutions, we've had obviously a demonstration by different organizations, you know, showing an acceptance of these types of conditions existing in Fiji. We also have, you know, the DSSI, for example, program, but of course it's more targeted towards health rebuilding, taking care of the various socioeconomic impact of the COVID-19. But however, your ability to build back better again is limited. There is this year, our debt to GDP ratio is now shot up to about 85%. And Kristalina will tell you that we have to be mindful of our, you know, of our debt situation, the sustainability of the debt levels. So just yesterday, I spent an entire day with the team looking at, you know, putting in place various policies in place to have ensure a downward trajectory on our debt to GDP ratio, because we need to ensure the sustainability. That has an impact, of course, on your ability to respond to various climatic events. That has your ability to respond to building back better. So, things like accessibility to affordable finance becomes critically important. Whether you're talking to the World Bank, we're talking about IDA funds, that again becomes critically important also. So, there is no doubt that if you actually build back better, you can actually, of course, respond to climatic changes in a lot more, resilient manner. You'll have less damage. So you don't actually have to spend that much money on a yearly basis. We've had about 13 storms or superstorms in the past 8 years. You seem to sometimes think, well, I'm not getting out of it. But one of the positive sides of it, of course, is with this recent cyclone just a few weeks ago, the areas where we had actually built back better after Cyclone Winston, those, for example, schools, public buildings, weren't damaged at all. There was some superficial damage, to, for example, water seepage, etc. But structurally, all those buildings were very much sound. So we don't actually have to fork out that much money.
And on a point that Kristalina brought up earlier about
very much sound. So we don't actually have to fork out that much money.
And on a point that Kristalina brought up earlier about, the possibility of, theoretical at this point, but sort of linking debt relief or debt restructuring to climate efforts. Is that something that would make sense for Fiji?
Absolutely. We have all, been, I suppose, started the mantra of that development finance equals climate finance. In particular in countries like Fiji, where major focus is on adaptation. And we welcome any, debt restructuring or any type of financial instruments that would help provide a particular focus on being able to, finance building back better, and in a way that is cognizant that without this restructuring of a financial approach to building back better, most countries in the world that are at the cold face of climate change will be caught in a conundrum. They'll simply, if they don't build back better, they simply will be rebuilding year after year. And as we've seen, we are now, there's a prediction now that we will probably get another 2 storms in this cyclone season, which ends in April. We've already had 1. So I think there has to be an understanding and probably an appreciation and in fact, accommodation by, various international agencies that there needs to be an effort in putting finance upfront for climate works, for building back better. And only then countries like us can actually progress. Otherwise, we'll be sort of stuck in a time warp, if you like.
One of the monumental challenges in obviously dealing with climate risks is that they're unprecedented, and they don't operate obviously like financial risks do. So I suppose this metaphor is somewhat inexact, but in financial crises of the past, 1929, after that we got standardized accounting. After 2008, we got measures to improve the reporting of risks and exposures in banks. Kristalina, I wonder, what do you think it will take? What magnitude of crisis, or indeed perhaps no crisis, will it take for us to get proper measurement and proper disclosure from the private sector around climate risks?
Well, I hope we don't have to live through a global catastrophe to take the actions that are necessary. And fortunately, the wind is changing with regard to climate-related risks. We now have the coalition of central banks that are concentrated on disclosure. The IMF is an observer, and we are an active proponent of standardizing reporting of these risks and then moving towards from voluntary to mandatory disclosure. It is so important that we can see the assets we hold in a trajectory over time and be able to anticipate potential dramatic shifts in the value of these assets. And that I am confident that by the time of COP26, there would be a much higher degree of commonality and approach on how we deal with these risks. Beyond the financial sector, we have a very important objective of standardization as to what we consider green. There are shadows of green. There is quite some greenwashing in promoting green investment. So good news, a little bit less good news. Good news is the trend is up so clearly. Green bonds, green investment is going up. Not so good news. If we compare the green investment with the plain vanilla mainstream investment, it is still a mountain and a mouse. We have to create incentives for mainstreaming green investments. And I want to go back to the point I made. Carbon price is the very best way in which we can accelerate mitigation. Pricing disaster risk is the other element we have to work on. It can be done. And if I may, just to say something with regard to Aiyaz's comment on cost and the global obligations to countries like Fiji. When we did an analysis on the cost for resilience, building resilience in Asia, on average for Asia, 3% a year is what would be required. On average for the Pacific Islands, 10 to 15% of GDP a year. If I recall, for Fiji, it was 9%. This is a dramatic difference, and we have to find ways to do transfer financial support for countries where the needs are so profound and obviously they cannot carry this burden just on their own. Therefore, we have to look at grants and concessional financing on scale. I agree with Aiyaz very much. We have to rethink the concept of concessionality. Right now, it is only related to income per capita. Poor country gets grants, concessional finance. Richer country doesn't. But if a middle income country is highly vulnerable to climate shocks, we have to find a way to factor this vulnerability in the way we provide support to these countries. So to finish, we have to create the right framework through standards for the financial system. No way we can sleep on this problem anymore, and it is moving. We have to provide incentives more broadly for private sector to move to green investments, and we have to help the countries that are at the front end of this climate crisis so they can be resilient and withstand it.
I wonder, and this is something that's debated in, economist meetings. Do we expect too much from green finance? I mean, for example, fund managers have, some influence over, indeed a big slice of the economy, but actually, many emissions occur outside of firms that they control, and they can't directly influence, kind of state firms that are involved in energy and fossil fuels. Is there Are we offering, Kristalina, kind of green finance is a kind of catch-all solution?
Well, my professional view on that is we have to make the market economy insensitized to be resilient and low carbon. And we know that markets react to incentives, and also we know that market failures require regulation. So that is a combination of two types of measures that would underpin this shift. On market incentives, carbon price is a very powerful incentive. We did a calculation at the fund of the size of indirect fossil fuel subsidies, not the direct that we see the difference between cost and price, the indirect, and it is mind-boggling. In 2017, $5.2 trillion of direct and indirect subsidies, of which 300 billion direct and the remaining indirect. And when you disaggregate, what is it? One, health cost. We pay for fossil fuels with our health. People die because of polluted air. And about a quarter is carbon not being priced. So you change, obviously this has to be done carefully, it has to be forward guidance over time. We cannot shock the economy to collapse, but that would change, of course, the direction of investments. And then sectoral policies, you know it, we have fees and we have rebates, create the incentive, and then the regulator has to be also there by making it so that society, the interest of society is the one that drives what we invest. And we would, sure enough, we see it in countries that are more aggressive going green, that the economy responds to these incentives and responds quite well. Now, the good part of this story is that when we do it, we boost growth and we boost jobs. It is amazing how many still hang on the myth that climate action is bad for the economy. How could it be bad? Because you have investments in green that happen to be in big chunk also job rich, like building insulation, reforestation, mangroves restoration, land restoration. So let's just say we are talking about a healthier economy and higher standards of living if we do what we are discussing here on scale.
Absolutely. Aiyaz, I wondered if you sort of wanted to come in on kind of this point about, what green finance can do for countries such as Fiji and sort of what it can't do, and understanding the realities of what's on offer.
Thanks. Look, I mean, I wanted to, when you talked about the, for example, green bonds, we've launched our green bonds with the assistance of, World Bank and various other institutions, in particular IFC, about a couple of years ago. Optics was great, as I said, but the interest rates weren't. It's listed on the London Stock Exchange. Interest rate is in excess of 6%. So, we are very much applauded for what we did, and we're actually very proud of it. We were able to launch it in a very short period of time. But the actual cost of that actually is something that is of concern. We are currently looking at some blue bonds because, as you know, we're an oceanic country. There are various aspects in respect of the blue economy itself that we can leverage off. And obviously it makes sense for us too, because, nearly 40% of our tourism, of our economy comes, or GDP comes from tourism sector. They come to Fiji because of pristine waters. We have to ensure that we preserve that. But there are, various impacts completely out of our control, acidification, of the ocean, the dead corals, etc. So there needs to be investment in that space and a sort of sustained approach to it. There is, we believe, an opportunity working with our development partners without necessarily distorting the market and the pricing within the market or bonds, but having some influence for us. So we have had, currently we're talking to some of our bilateral partners, that if we did launch, for example, the blue bonds, if the market sort of says, gives you a 6% rate, whether our development partners actually can come in and subsidize about 4% of it, and we bear the cost of 2%. So you're not necessarily distorting the market, but at the same time giving us access to a financial instrument that hopefully in time, as we have, for example, various investments, superannuation funds, etc., they have a social corporate responsibility aspect to their investment. Some of them, for example, won't invest in liquor companies or cigarette companies, for example. You can flip it around and say maybe a certain percentage of the investment portfolio should be in the climate change space, and assisting countries like us. So they expect not necessarily the full market rate, but a lower rate, but nonetheless they're ticking the social corporate responsibility box. I think that's critically important, and we do require the input from the IMFs of the world, the World Banks, the ADBs, etc. I think so. That's critically important. Secondly, I think the other point is we're just about to put in place our climate change bill to Parliament. We've had about 2 years of consultations, and it goes. One of the key aspects within this bill is what Kristalina talked about. Is about carbon trading. So we're having a national carbon trading platform. You have a country where 91% of all the land in Fiji is communally owned by various landowning units, what we call tribal groups. And so we put in place a mechanism how they can actually get access and indeed see the benefit of keeping the trees in the ground and making money from it without necessarily having to cut it down, but also giving them access to finance, helping build communities. The last point I wanted to make in respect of financial instruments, the point I made earlier on, is not just simply a question of getting, concessional financing or grant financing, which is welcome as it is, but also building some long-term sustainability. Key aspect is insurance, getting access to insurance products. So when we had Cyclone Winston, we had to spend money to help people actually build their homes, at least give some part of funding towards rebuilding, because there's only about 10 to 12% of all the properties in Fiji actually insured. The very onerous requirements that have been put by private sector insurance companies in being able to get cyclone cover. We have been talking to various international agencies to how we can actually develop insurance products that may not give full indemnity cover for if your house gets blown away or there's a particular level of damage, but perhaps some form of relief where we have some basic cover. If you do basic strappings, then you can get a cover up to say $5,000 or $7,000. And I think that's critically important to ensure that we get those products. We build sustainability. The other aspect, of course, that I want to talk about is this issue about increased disclosures. Because increased disclosures actually, from one perspective, can be, some people view it as a negative, because the reason why they view it as a negative, because you are actually stating your vulnerabilities up front. So if you are going to say, for example, a resort that's on the beach or somewhere close by to the beach and say, look, there'll be actually water in your room in about 10 years' time, it can reduce property prices. It can have an impact on the level of investment. But we have taken the bold step that we need to be able to be upfront with our level of vulnerability. What are the actual vulnerabilities? Because if we recognize them now, you'll be able to better react to it with a more sustainable approach to the realities of climate change.
I hate to interrupt you, Minister. I fear that a panel with the Managing Director of the IMF and Fiji's Attorney General, it was always going to be too short. But I do regretfully have to bring it to a close. But thank you both so much for your insights. I really wish we had longer, but at this point, I have to hand over actually to Andrew and Emma to reflect on what they've heard over the sessions and discuss a little bit more. But thank you both so much for your participation.